I think the rest of this year is going to be challenging. Mm-hmm. I think the beginning of 2026 is still going to be challenging as we try and find our feet within these new realities, the VUCA that we've been talking about.
Yeah.
But I do see a shift coming in 2026. Mm-hmm. It's impossible for companies to continue being on pause for years. It's impossible.
Yeah. You do have to make a decision.
Absolutely.
Yeah. Hello, and welcome back to the Espace Publication Montreal Podcast, a show dedicated to commercial real estate right here in Quebec. Today, it's a pleasure and an honor to have my friend Jean-Marc Dube, Executive Vice President at Colliers, looking after the industrial market.
That's right.
Hi, Jean-Marc. Welcome to the show.
Thank you for having me.
All right. It's a pleasure to have you here. There's been so much happening in the industrial market.
Crazy times.
And with Andrew, the publisher of Espace Montréal, we wanted to get an expert in the field. And, you happen to be that guy.
Well, when I got the call, I was pretty honored. So thank you.
Well, look, the point here is to share value with our listeners. You were recently in an article in the magazine, and we really want to continue being at the forefront where thought leaders come to express their views on what's happening on the local market. So before we have your take, you being on the market very often, first of all, how did Jean-Marc get to be executive vice president? How did you get started in real estate?
I actually have a pretty interesting parcours. I actually started as a teacher.
What?
I was a school teacher.
Okay.
That was my first career.
Yeah.
I taught everything from kindergarten right up till high school science. And during the summers, as a teacher, we all know, they're grossly underpaid,
yes.
As was I at the time.
Mm-hmm.
So I was looking to do some stuff in the summer that would keep me busy. And I decided to start a small business. And I really got that business bug.
Okay.
So I went back to school at night to do a marketing certificate while I was still teaching during the day.
Okay.
And lo and behold, I really discovered that I love business. Mm-hmm. So I ended up leaving the teaching profession, which, by the way, I still have aspects that I learned from teaching that I use in my business today, especially when we're mentoring young guys and young people in our business. So I got into advertising, and I stayed in that sector for a couple of years until my wife owned a restaurant. And there was this one person who's actually still in our industry who would come into the restaurant and would see me working late at night on my laptop. And he came to see me and he said, "You know what? I'd really like for you to look at commercial real estate, and you could be a broker, and if you work hard, you could be successful." And I had no idea what he was talking about.
Yeah.
And then fast forward, about a year later, I ended up deciding to take the plunge after having met a couple of times, and that's how I've got into commercial real estate, and that's 20 years ago.
So that person was pretty influential.
Very.
This guy who came at the restaurant and convinced you slowly. Wow, good.
Over some glasses of wine, of course.
Yeah.
Well,
seems like it worked out.
Yeah. And then I've been able to meet some just fantastic people through the industry. And I think, one of the things that's allowed me to be successful are the people that I've surrounded myself with. Yeah. I have great partners. I have great young guys working with us. People, I try and be as relationship based as possible.
Yeah.
I still think we're one of the final relationship-based industries out there, commercial real estate, and I take a lot of pride in the great relationships that I've built over the last 2 decades.
Yeah, for sure. It's for years I've always said, you buy a building, you buy brick, you buy a roof, but it's a relationship-based business.
Agreed.
And that's a lot of what it's on, especially when you come to the brokerage side. So then you went up the ranks at Colliers.
So I actually started off at a company called J.J. Barnicke, which was at the time, this is 2005, the largest independently owned brokerage shop in Canada, which got sold to a company called DTZ, who based out of London. And with the global recession, this company went through some very hard times, and we decided that we were going to make a switch. At the time, my partner and I, to a company that was more locally owned. So Colliers being a Canadian-based company. We started there in 2012. So that's my parcours. And look, Colliers has been a fantastic company. Great support, great research. Really has allowed us to run our business, which what brokers do.
Yeah,
you run your own business within the firm.
Yeah.
But yeah, we get a ton of support from them. So it's I see myself finishing my career there.
Did you have a particular attraction for the industrial sector? Like, how did you end up niching down like that?
I mean, really, it was because the people that attracted me to the business that's what they were doing. I didn't have any particular, even when I joined, I didn't have a ton of knowledge about the real estate market in general. I just knew that I was with a couple of great guys, and those guys were going to, really teach me the ropes, and they were industrial guys. So that's how I ended up in that world. Very glad I did. It's been a lot of ups and downs in the industrial market, but generally it's been consistent for us.
Nice. And so, as you said, like you've essentially built your business in the under the Colliers umbrella.
Correct.
And then, so how do you get started? What were some of your first deals? Because I want to get to the market now.
Sure.
The market now wasn't the same in 2012.
No, not at all. And actually, so when I started in 2005, it was still not an easy market. And we didn't have the research tools that we have available to us today. Google Earth did not exist in 2005. So we spent a lot of time cold calling. We spent a lot of time researching companies. I would spend Saturday mornings driving up and down streets. This is, for the young people getting into business. I mean, real estate is still traditional, old school tactics. I'd spend Saturday mornings cataloging buildings, writing down the addresses, going to find out who owned them, who the tenants were, calling them, and then you would just build that database. And maybe you make 500 calls to get one person who actually needs some advice. Yeah. And then you would bring in the senior guys that are working with you, and you would go pitch the business. And that's how I started. It was really sweat equity is what I brought to the group, and that's how I still operate today. We still work a lot in sweat equity. Obviously, 20 years in, I have a little bit more depth of knowledge now in the industry, and now we work with a lot of institutional players who own billions of dollars worth of real estate, who are looking to us to help guide them in their decisions. Yeah. Whether or not they go on acquisitions, whether or not they should be doing a leasing deal. Mm-hmm. That's the bread and butter of my business now.
And as you said, like starting on the street and taking down addresses, making those calls, like this is the relationship-based business.
Absolutely.
I've done that as well for resident multifamily buildings, and there's nothing fun about it. But as you said, all it takes is one good conversation, phone call to make that entire morning worth it.
Well, when you're driving down a street and you see the Mercedes parked in the parking lot on a Saturday morning, the president's there.
Yeah.
So what a great opportunity to go knock on the door and have an immediate meeting with a decision maker.
Exactly. Go introduce yourself.
Right.
So now you've put in the time, you've learned, and now Colliers is really at the top of its game for the real estate market, for the industrial, and that's what we're really going to be focusing on. And I want to get to, there's so much that has happened over the last 5 years.
That's for sure.
And, depending on how far we want to rewind, but we can just start with COVID and then the changes in consumer demand. We couldn't get enough industrial space at the time, a lot of warehouses for pick and pack.
Correct.
And then now it's kind of stabilized. And so I was hoping you could kind of refresh our memory for those who aren't as versatile in the industrial market to kind of take us to today's market, and we'll go with today's complexities.
So when I started in this industry, 20 years ago, we were doing net deals. So net rent deals, I would say anywhere between $3 to $5 a foot.
Okay.
And that stayed pretty consistent right up till 2020. Mm-hmm. Obviously, there was some growth, but I would generally say that the greater Montreal area was pretty flat for rental growth. And before the pandemic, we were topping out at like $6, $7 a foot. Fast forward one pandemic later, I remember in March 2020, in April, and wondering what was going to happen.
Whether it was going to collapse.
Was the economy going to collapse? Yeah. What was going to happen to my career, the company's career, like all the people that I'm responsible for. And then it just skyrocketed. Yeah. And it was jamais vu. Unseen, uncharted territory. And we saw a meteoric rise in rents. So we went from, call it a $7 average asking rent in very short order to $16. Oof. So more than doubled. And you can imagine, that people who had been renting for $5 for many years, they were caught up in that whole wave. Yeah. And, but markets evolve, companies evolve. Those companies were able to evolve also. And I think that we generally, over the last, I would say from 2020 to 2023, we had a very stable growth, good growth. Valuations on buildings were very healthy. And then some of the interest rate environment came into play. Yeah. Okay. And the interest rate environment was very, very difficult to circumnavigate.
The rapid rise.
The extreme rise, right? And what we understand is when we look at interest rate and how they affect industrial real, it's not just how does it affect the loan that you get on a building or the value of a building. Most industrial occupiers, so the people that are using the space that are filling up these 300,000 square foot buildings with product, they're not buying their inventory cash. No. Okay, they're either doing it through inventory financing, they're doing it through credit lines, and I remember sitting with an occupier who had $30 million worth of inventory at 9%. And so we saw some companies that just wanted to get the stock out of the building because it's literally costing them money to sit there. Yeah. And liquidating, moving stuff out. And we saw that phenomenon for a couple of years. And it was I think that was more challenging on the occupiers than the rate increases. Yeah.
Then, as you said, the interest rate doesn't just affect the financing on the property.
That's right.
It really affects the client's operation, which makes him unable to sustain at those high rates and keep the building and afford the rent.
Well, as the rates were, the rental rates were rising, the economy was getting better and stronger, and the industrial market as a whole was just on firing on all cylinders. Yeah. Well, once you threw in 1 year of these crazy interest rates, which, by the way, and historically are not crazy, it was that rise in interest rates. It really put a damper on the economy. But again, we were able to circumnavigate that. Business had stabilized, I would say, in right up till 2024. And the beginning of 2024 was tough. Yeah. Because of that environment that we were in, we saw
the end of the recovery.
And we saw a lot of sublease spaces coming on the market. We saw there was a lot of third-party logistics companies also. That just for people who a third-party logistics company is somebody who will handle and warehouse goods on behalf of somebody else. So during the pandemic, the early years of the pandemic, there was such a demand for e-commerce and warehousing that these companies were out signing leases left, right, and center, trying to secure spaces so they could just fill them up with whatever product that they needed to, because people were very concerned about what was going to come in from overseas, the delays. So we were rushing goods in, we were storing goods, getting ready so that we would not have a shortage or, well, what ended up, these companies ended up drying up. And so a lot of those spaces came back to the market. Yeah. And that's what we saw in the beginning in 2024. And everything was, I would say, the first half of 2024, quite slow. Come Labor Day last year, it was a totally different ballgame. We really started to have more belief that the economy was strong.
Yeah, it was picking back up again, and then...
Absolutely picking back up. We saw more activity in the first couple of months after Labor Day than we had seen the entire rest of the year prior to that. Then we had the famous tweet that came in from the president saying, in regards to the tariffs.
Yeah.
And it just put a cold shower on that economic activity and forecasted growth. And, whether you're a fan or not a fan, I think as Canadians, we're probably not a fan, right?
Yeah.
But
general consensus.
Right. But put that aside, it really put everybody on pause.
Yeah.
Okay. And we've been in that mode now since last year. Okay. Since the end of last year.
Yeah. Now it's exactly been a year, actually. Yeah. It was early fall.
Right. So when we started seeing that activity level really picking up in September, we haven't seen that same activity level pick up this year. And that's because we're still almost in a wait and see situation where occupiers and people looking to invest in equipment, people looking to buy buildings are wanting to have a little bit more stability, a little bit more certainty, which is a good lead into what I know we've been talking about a little bit about
VUCA.
About VUCA.
Yeah.
So VUCA is an acronym that's being used not just in commercial real estate, but just across business in general, which is volatility, uncertainty, complexity, ambiguity.
Yeah.
And I think that's very true for the commercial real estate market also. We're in a situation right now where we're waiting for that stability to come back before we start making decisions on what our next steps are.
Yeah.
How many employees are we going to hire? Are we going to expand? Are we going to renew? Like, what are we going to do? And let's just wait and see what happens. Well, my feeling now is, for what we've seen, at least in the last 5 years, is we're going to be living this type of instability and volatility, I think, for forever.
At least for 4 years.
Well, look, perhaps, but I don't think a lot. We got to understand, it's not just because one American president got elected that we're in this situation. There's all kinds of stuff going on around globally.
Okay. So the war, the conflict in Ukraine.
Conflict in Ukraine, conflict in Gaza, interest rates.
Impact on supply chains.
Impacts on supply chains. All of these things have had a major impact on the economies of the world. And look, the industrial market is the engine of the world.
Yeah,
right.
Basically.
So when that starts to slow down, that's when we start to see a lot of concern about where the economy is going and where we're going globally. I mean, not even to throw an AI into that now, which is in its infancy.
Yeah.
So that's another disruptor, and that's why we've been speaking to, when we speak to our clients, we try and explain that our thought is that there's going to be good times and bad times ahead, but to wait for stability is you're going to be waiting forever at this point.
Are we ever going to get stability again? That's the big question. As you said, like, there's so many macroeconomic factors, conflicts and wars that are happening right now that it could be years before we go back to somewhat certainty. So now business owners, as you said, how much space do I need? How much product do I order? How many employees do I hire? They still have to make those decisions in those difficult times.
Well, what we're seeing now, and it's a good segue, because what we're seeing now is that now we're seeing a bit of pent up demand. Okay, you can't go 9 months without making decisions and without moving your business forward, without going through these decisions. And right now we're starting to see a little bit of pent up demand. So people are saying, you know what?
Let's do it.
I have to make a decision. Yeah. Okay. It's either I'm not putting the key in the door. I absolutely want to continue my business, and I can't, if I sit and wait for that, perfect timing, then I'm going to be waiting for a very long time. So we're starting to see that now, where we've seen very little transaction volume over the last 9 months. We're starting to see a little bit more people poking their heads up, trying to say, hey, like, what's out there now? Yeah. The other thing that's interesting is we're starting to see companies that were looking in the market, and then when they see a building that actually got leased, even though maybe the pricing is not at optimum, these buildings are coming off the market, and these tenants are saying, hey, wait a second, I would have liked to have rented that building. So we're starting to hear that commentary coming in the market, which I think is healthy.
Yeah, because that means it shows there's demand.
Yeah.
And if these people feel like they missed out, then all of a sudden, that's
FOMO is pretty strong in our industry.
Yeah.
Yeah.
And so, you mentioned the acronym, the volatility, the uncertainty, the complexity, and ambiguity. We still have to evolve and to lead our businesses in today's environment. What are you advising your clients to do when they're on the fence of making another acquisition or a big lease?
Look, I think it really depends on. It's a very good question. It really depends on the occupier, and we advise both occupiers and landlords and building owners. So it depends on the operations. It really depends on what the long-term strategy is for that company. I'm still optimistic about the industrial market in Canada. If I look at where we are right now, and it feels like we've got the weight of the world on our shoulders. It's very difficult. There's not a lot of investment in Canada, a lot of global investment in Canada. Our productivity is
tanking.
It's a real problem.
It's a real problem.
However, we have everything that the world wants. Okay, so we have critical minerals, we have agriculture, we have potash, we have energy,
water.
We have water. Well said. So I think that long term, all this stuff that's happening is going to be very, very, very good for Canada.
Yeah.
Okay. And when Mark Carney says that we should be one of the richest countries in the world, he's not wrong.
No, he's right. And how come we're not?
Look, I know and
that's a political question,
right?
You don't have to,
without getting into politics, But look, whoever is in government right now has some very large shoes to fill. They need to absolutely be investing in Canada, and I think we're seeing that. I think people are perhaps disappointed that it's not going as fast as possible, and we hear that from our clients. But at the end of the day, these are major infrastructure projects that we're talking about, and it's going to take time. So, that's where. So, how do I advise our clients right now? It really is on an individual basis, depending on what their long-term goals are. But as I said before, I am optimistic about where we're going with this.
I completely agree with you about how everything that's happening in the world will still fuel Canada's growth, because as you said, we have a lot of resources. We have a very low population for the size of our country.
Correct.
And Canada will keep being seen as a place of refuge. So in the long term, it's good. It's just in the medium term, how do we go about it? That's a whole other question. And sometimes I fear that we've been so attached to the U.S., our productivity's gone down, and we need a bit of a wake-up call and start producing again and get better at it, not just relying on our natural abundance of resources.
Well, I think this is and will be continue to be a wake-up call. I think it was, when Prime Minister Carney said that our relationship has changed forever with the U.S. Look, I believe that.
Oh, yeah.
Do I believe that we're going to be economic adversaries forever? No, I don't believe that at all. And I actually was just in an industrial conference in San Antonio. So I'm really about the U.S. market. Their economy is going very well. And I think that regardless of whatever's happening in this period of time, our economies will always be tied together.
Of course.
Okay.
Yeah.
So we want a strong U.S. And I think the U.S. wants a strong Canada also. We're going through some friendly, I guess we'll call it spats right now.
Yeah.
But I think long term, that relationship will it doesn't have a choice but to be.
No, exactly. And it's interesting to see everything that's happening over there and how that impacts us. And that was going to kind of lead me to my final question for you in terms of all the impact, and what do you see, given everything that we talked about for the local market? Because
good question.
This show is about Montreal and Quebec, and what do you see? You're an expert in the field. What do you see happening for us here for the next 12 to 24 months in the Montreal industrial market?
So generally, I think the rest of this year is going to hurt. Okay, I don't think it's going to be strong. I think we're going to see landlords who are more flexible. Although we're not seeing a big decrease in rents. Okay. Rents have actually been relatively stable.
About what? About $10 now?
No. We're way more than that. We're still almost $15. Okay. I think we're in the mid 14s to 14.75 and. The apex of our market, we were at $16.70. Okay. So we haven't fallen that far off. It's still on the higher end. Yeah. We are seeing some deals that are getting done below those numbers. We're also seeing deals that are getting done above those numbers. Okay. So I would tell you that generally right now, rates are stable. Our vacancy has also been relatively stable. And we're sitting at 4.5% right now. And when I started in this industry, 4.5% would have been a dream.
It was a dream come true. Right? Yeah. It was what, like 20?
Oh, it wasn't that high, but it was definitely right up in the 9-10% range. Yeah. But what we're seeing now is there's been a shift into Class A product. Okay, so more and more companies are now looking for that very high bay, brand new buildings, energy efficient. Carbon zero is a real thing now. Yeah. People are actually asking for it, especially larger Fortune 500 companies. So that's had an effect on the Montreal market. But more importantly, where I see our market is that developers stopped building. And when interest rates went through the roof, it was a hard stop. A couple of buildings have been delivered here and there, but in comparison to the Greater Toronto area, which had a healthy pipeline, our pipeline dried up a long time ago. Stopped. Yeah. So once the economy starts to churn again,
it'll take 2 years to put new products on the market.
Well, yeah. I mean, by the time, and no one's really breaking ground right now. There's a couple of developers that'll do a project here, project there, but the vast majority are on pause. And we're going to end up in 2027 where, there's a demand starts to really rise for industrial buildings. We're not going to have the product. No. So we're likely going to start to see some shifting in net rents going up. So I think the rest of this year is going to be challenging. I think the beginning of 2026 is still going to be challenging as we try and find our feet within these new realities, the VUCA that we've been talking about. Yeah. But I do see a shift coming in 2026. It's impossible for companies to continue being on pause for years. It's impossible.
Yeah. You do have to make a decision.
Absolutely.
Yeah. Well, thank you for this insight. One thing that I love about the industrial market is that yes, it's part of real estate, but it is so linked to the global economy.
Correct.
And in today's globalized world, I mean, we don't have the choice. And as you mentioned, like so many factors outside of Quebec, Canada affect us directly because we're dependent on that. And it is a little like the automotive industry in a way. It could be considered as kind of the thermometer of the industry. When the industrial sector starts pushing again, there's optimism ahead. And so,
no, and I'm definitely not what I would consider an eternal optimist. I really try and be pragmatic and a realist. But I am optimistic. Okay. I'm optimistic for the next couple of years. I'm very optimistic for 5 year plus.
Okay. Well, to all those who are listening, let this be a bit of a wake-up call and a lesson. There are bright things coming ahead. It might not just be between now and Christmas, but eventually it's coming. Thank you very much, Jean-Marc, for coming on the show. It's been a real pleasure to have you. I'd love for you to come back and in the future, see how the market is doing.
Anytime.
And keep a lid on all this.
Thank you.
Thank you very much. And to all those who are listening, as usual, keep educating yourself and share this conversation with a friend who could benefit from this conversation, because people around you who are very interested in the industrial market, and there's been a few golden nuggets here today. So share it, and in the meantime, I'll talk to you next week. Thank you very much.